Microsoft issues a delay alert for cloud computing. Microsoft on Tuesday warned of a significant slowdown in its cloud computing business as big clients hold off on purchases in the face of a weakening economy, sending its shares down 7% in after-hours trade. The cautious remarks, which were made on a conference call with Wall Street analysts, dashed hopes that the world's largest software company would be able to withstand greater pressures in the IT market and that continued strong demand for cloud services would compensate for a decline in the PC market. Without taking into account the impact of currency fluctuations, Microsoft cautioned that revenue growth from Azure, the cloud computing platform that has grown to be one of the key engines of its company, will decrease by 5 percentage points this quarter. With a growth rate of 42%, the quarter ending in September was already 1% below experts' forecasts and 4% below the previous 3 months. CEO Satya Nadella attributed the cloud's slowdown to consumer attempts to optimize their expenditure in order to save costs as the outlook for the economy grew gloomier. Microsoft also stated that this year's expenditures will increase by $800 million as a result of increasing energy costs associated with operating its enormous cloud data centers. Microsoft projected revenue of between $52.35 billion and $53.36 billion, or $3.2 billion below Wall Street projections at the midpoint of the range, with income from software sales to PC makers anticipated to decline by more than 30% this quarter. After Microsoft had earlier indicated that it had generally weathered the economic slowdown in the 3 months to the end of September, the negative analyst call followed. Wall Street estimates were slightly surpassed by revenue growth of 11% to $50.1 billion, while profits per share of $2.35 were 4 cents better than anticipated. The data showed a dramatic decline in demand for Microsoft's conventional, highly lucrative PC software, which hurt its higher profit margins. Software sales to PC manufacturers decreased by 15%, leaving Microsoft's more personal computing division's overall revenue at $14.3 billion, up 3% in constant currency. The third quarter saw the worst drop in PC shipments since Gartner started monitoring the industry in the middle of the 1990s, down 19.5%, according to the research company. The weaker profitability of the cloud business hurt margins even though Microsoft was able to more than make up for the lost PC software sales with a 31% rise in revenue from its commercial cloud operations. Microsoft claimed that its gross profit margin would have dropped by 3 percentage points in the quarter if it weren't for a change in accounting rules that increased the usable life of its data center equipment and decreased depreciation charges. After adjusting for currency fluctuations, the Intelligent Cloud division's revenue, which includes Azure, increased 26% to $20.3 billion in the most recent quarter. Office's business, productivity and business processes, saw a 15% growth in revenue to $16.5 billion. Microsoft reported that the sharp increase in the currency reduced sales by $2.3 billion. The completion of its acquisition of Nuance, whose sales for the same period last year were close to $350 million, and a price rise earlier this year for its Office 365 suite of productivity tools also helped the most recent numbers.